I'd like to tell you a little about who I was before today, long time ago. Scarcity mindset, fear mindset. Grew up in the middle class, Bayonne, New Jersey. 75,000 people, 3 miles. Everybody knew everybody's business. My schoolyard was riddled with, fights and chestnuts and, chestnuts that we threw at each other. Sarcasm, insecurities. My family life was, my parents had no financial education. They bounced checks. They had love, but there was really no education, and they didn't know what to do with money. And by the 20th of every month, there was never any money left. Does anyone identify with that? Raise your hand. So today, the goal is going to be, how do we transform from a financially scarce mindset to a financially abundant mindset? Because that has to happen first before your money, your time, your wealth begins to explode, right? Who here's up for that? Who here's up to change the trajectory? Okay. So I want to thank you once again for your time. I lived most of my life in a scarce mindset. It's been the last 5-10 years where I've been able to transform after my first wave of financial success to really understand the map and the strategies of what this looks like. And by the way, I'm just at the beginning of the beginning, just so we're clear. I never would have thought 5 years ago I would have been on a private jet to go to the Ukraine on a humanitarian effort. Did anyone ever write goals out and say they wanted to be on a private jet? Raise your hand. The problem with goals, you have to be specific. I didn't know I was going to a country to help serve, people that were like just losing everything. So I did get to go on a private jet, and I did get to go to the Ukraine, which was one of the greatest gifts of my life next to my sobriety, my wife, and my 3 kids. Unbelievable experience. And I encourage anybody here to go out and touch somebody that is struggling in the game of life with your heart. Have a conversation with them. You could do it locally. You could do it where it's not just for me about writing money to charities, because I did that. And I didn't feel fulfilled, So Chris gave me the opportunity when he called me, and there was no hesitation. The only question I had was, are the insurance companies going to pay a death benefit if I were to shuffle off this mortal coil? Because I was concerned about that, right? My wife, kids, and I wanted them to be able to live on financially, God forbid, if something happened. And in fact, we did get it. And that's the level of research and things that we do along the way to be able to serve and contribute to you good folks that are here today. Now, as we sit here today, the 30-year mortgage rates are at 5.9% today. The NASDAQ is down over or close to 30%. The S&P is quickly approaching 23, 24, 25. And the Dow is really getting close to 20%, which means across the board, we're looking at a bear market, right? We know that the financial institutions and their advertisement bring to us the ideas of what we should do, whether it's going to be fear or whether it's going to be greed, right? And that's what you see on commercials. Somebody told me when I was at a mastermind the other day that every day we're hit with 5,000 pieces of advertisement, whether it's we're looking at each other's sneakers, shirts, whether we're driving in a car hearing something, or looking out on the road, whether we're watching something on TV. I think Chris mentioned yesterday that people spend about 13 hours on a screen. So think about the fact that all of these corporations want your money, and they have creative ways to get it from you. Does that make sense? Right? Does it happen every day? Do you agree? Is that okay? So the truth is, and I think all of us, money's a piece of paper with Benjamins, right? It's what money can do for us. And it's been my experience, and I'm going to share my experience, is what do people really want? For me, it's time freedom, obviously, right? But they typically want to do what they want, when they want, with who they want, and how they want, right? So if you could have it all, and you could do it your way, it's Christmas, whatever holiday morning you is part of your religion, What would that look like? These are the questions that you want to ask yourself. What will it look like if you could have what you want, when you want, how you want? Where there was no constraints. And start getting that into your nervous system. Chris did a beautiful calculation just now. He made everybody pull out their calculators. Why do you think he did it? Because he wants you to get used to the process of monitoring and measuring. And instead of just talking about it, when you go through the process, it gets into your nervous system. That's an important distinction, right? And there's going to be folks that come out of here Monday, no different than Ryan Rice, where he's like 17 properties strong right now, right? That's just going to break away from limiting beliefs. That's just going to jump in and follow a process. And listen, money's no different. And the reason why people aren't getting what they want is because across the board, there's financial noise because of all the different graffiti that's coming our way, all of the different ideas, right? So I know, like, on TikTok, we have, you could short this stock or buy this stock and all these different momentous trades that were happening. And by the way, for anybody that made money doing it, awesome. The challenge with that mindset, though, is there's a dopamine hit to it. And it begins to affect you in a way where you think that's going to happen every time. I can't tell you, in some of the worlds that we're part of, there are people that aren't even in our industry telling people to load up on cryptos and Bitcoins and all of the other sub-Bitcoins and cryptos. You can tell I don't know it, in full. I'm not saying it doesn't have its proper place, because I believe it does. But when we talk about strategizing, before we get into the magic process, we always want to make sure that you have an economic philosophy first. Does that make good sense? If yes, say yes. Thank you. Appreciate that. So what is your economic philosophy? Write this down. Start asking yourself empowering questions. What is my economic philosophy? And by the way, if you don't know what it is, there's going to be opportunities to spend time with us, and we will help you discover what your economic philosophy is, right? So once you know your economic philosophy, and once you know that there's a difference between financial scarcity and financial abundance in the mind, I think Chris said something before about 90% psychology and like 2% finances, and you could become, he said some crazy language, but basically said you become a financial beast. That's what this is about. It's about mentors. It's about modeling. It's about systems and processes that you stick to that's tied to what your economic philosophy is. Are you guys with me? You guys feeling what I'm saying so far? I don't want to wait. I don't want to bore anybody. I want everyone to be engaged right now in a peak state. I promise the information I'm giving you, when you go back to the real world, will serve you so well. Now, a thing that I know doesn't happen, that we make it a point to happen, is whenever we sit down and engage with somebody, is we always want to make sure that your financial professionals are all on the same page for your benefit, tied to your economic philosophy. Wouldn't it be cool if you had a fiduciary, if you do, that spoke to your accountant, who spoke to your insurance agent, who spoke to your trust officer, who spoke to your attorney? Would that be awesome? Does anybody have that? Okay, because they don't want you to have that. If you're separated and your money's in all these separate pieces of investments, that's where the chaos and confusion comes from. And that's where you're exposed to the advertising that brings money in one direction or another. And a lot of folks out there, I'm not judging, typically have a junk drawer of financial planning, right? Now, if you look at the fiduciary space, these are beautiful people. They studied really hard for a test, and they're modeled into one thing: diversifying in asset classes, and I'm going to simplify it, stocks and bonds. And God forbid if you tell them you like real estate, they're going to tell you to buy a REIT, right? Because they're not getting paid on the real estate. And that's why you need to hold them accountable. It's important. Just like if you have an insurance agent, they need to be held accountable with an accountant and with a fiduciary. Because now, if you have an economic philosophy, and then you have a roadmap that follows the rules of money, the velocity of money, what will begin to happen, you know where your destination is. A lot of people have an idea of what they want, but they don't know where they are on the map. Does that make sense? Does that make sense? Thank you. So rules of money are simple. If you look at the financial institutions, right, and if you look at what we want you to be is a ninja. I love when I see that. That's something I don't usually say, but anyway, it's up there. So a financial ninja, basically it's simple. Whoever has a 401k, and this is the left side of the screen, the financial institutions want you to give them money on a regular and ongoing basis, even if it's an after-tax stock account. They want to hold it for as long as they can and then give you back the least amount as possible. And how they give you the least amount as possible, it's based on taxes if it's an IRA or 401k, or it's based on market volatility, and the whole way through they get to charge you fees. They don't want you to take it out to go buy a piece of rental real estate, right? So Barry Dyke, look him up. He wrote a book, Pirates of Manhattan. This guy is a genius, and he told on all the people on Wall Street. Even so much so that he has to have a security team around him because people are always coming at him. And what Barry talks about, in any business that we have, if you have a partner, you want to make sure you have a buy-sell agreement, John Swallow. You want to make sure that you have key employee stuff, John Swallow. And you want to make sure that there's protection in the business. That's a normal business. Does that make sense? When you have a 401k and IRA, your partner is the IRS. There's no buy-sell. There's no key man, and they change the rules when you take your distribution out. Meaning, we don't know what the taxes are going to be when you take distributions out because they've changed 40 times since 1960. So this is just education right now. I'm just trying to pepper in some education so you understand what's at play and what's at stake. Remember, 5,000 times a day, someone's trying to get our money. Financial institutions have their products that they want to sell. And unless it sits and fits with their core values, any alternative investments, they're not interested in hearing about. Right? So, what do we do? What kind of questions are we asking ourselves on a daily basis? What kind of measurements are we doing? Do we work 9 to 5 and have another job from 6 to 10 at night? Because I'm going to tell everybody right now, Sean Callaghy says it best, no one's coming to save you. And by the way, no one's going to warn you with a calamity bell that the market was going to go south. No one told you that in February. No one told you Russia was going to do an illegal occupation of Ukraine, which is now affecting everything that we have, right? All your real estate growth, your market growth, it's being threatened right now. But if you have a mindset that's right, I guarantee all my people that have cash value life insurance, whose money has not gone down, right now can go and purchase things on discount today. Guaranteed. Guaranteed. Whether you want to buy Bitcoin at 20,000 versus 60,000. I'm not recommending that. Whether you want to buy real estate, because that interest rate's going higher, at some point you have more negotiation power to get a reduced price on the property that you're looking to buy. Does that make sense? Come on, guys. Yes. Thank you. So it's important to understand the money concepts and have fun with the process. What's amazing is you folks are here. That means you want to learn. That means pain, not for everybody, but pain typically brought you here. For the people that keep coming back, you've seen the elevation and now you want more, right? Pain brought you here, but for the people that are coming back, you've seen elevation and you want more. Chris was talking about on the jet, and this is on the way to Ukraine, when they talked about him and Sean raised $1 million. Well, he was telling Sean about the $1 million. The guy that chuckled was me, because he was looking for 10 million. We didn't even get to the Ukraine yet. But the point is, he's always thinking about the next chapter. And that was a good lesson for me. Are you thinking about your next chapter? Are you thinking beyond now? Are you taking a clinical look at your business partnerships, if you have any? Who do you surround yourself with? Who are the top 5 people? Do they bring you up or do they bring you down? And by the way, whatever it is, that is your choice. Who is the top 5 people? Do you say yes to people just so they like you? Do you know how to say no with integrity? All important things mindset-wise when it comes to your money, right? So we often talk about, what is a lost opportunity cost? And we're seeing it right now on such a profound level because I think they raised rates 75 basis points yesterday. We don't know what's going to be in July, but we're sure it's going to be something. But if you look at just financing a car with a bank versus financing a car with your own bank, instead of paying the interest to the bank, you could pay interest to yourself, right? So think about it. I'm going to just speak in a concept. If I bought any kind of car, 5 years later, that car is worth less. If I paid cash, that means my cash is worth less. If I financed it, that means I paid more for the sticker price and the car is still worth less, right? But what if you finance it through your own bank? Well, the car's still worth less, but the money you use to finance it is worth more because now you're mimicking what the bank does. If we mimic the bank and if we mimic the corporate institutions or the corporations, the financial institutions and the banks in our own world, and by the way, you can't do this by yourself, at least not initially, what will begin to happen is you'll start bringing more money to you. You don't want to live in the space of and or. What does that mean? Well, I have money in a savings account or in my 401k, right? What if you had money in a bucket, uninterrupted interest, and I was able to buy other investments? So think of a rock with you drop it in the lake and you get that splash. What we're talking about is the ripple. And the ripple becomes more powerful as time goes on. Our process right now, I got people tripling down because they are now seeing for the first time what it looks like in a bear market. Some of you folks that are 30, 35 years old, you haven't seen anything like this. Even when COVID hit, it was about 6 seconds where it went down. But this is real. This ain't going away anytime soon. And it's important that you get all your affairs in order when it comes to that. So if we look at what is financial opportunity cost, and then we look at an IRA or a 401k, remember the government's your partner, that's after 59.5, and if you take it out early, there's all kinds of punishments. If you want to borrow from a 401k, you could borrow up to $50,000, but when you pay it back, you're paying it back with after-tax dollars just to get it taken out again at ordinary income. Right now, some of you folks, I think, have used your 401k or at least borrowed from it and bought real estate or bought other investments. And if your investments are cash flowing, that's a beautiful thing, right? And as we go through our process and we look at lost opportunity cost, the goal is for us, for you, to really be able to kind of close out that bucket and create, protection against all that leakage, whether it's credit card interest, financing your own debt. If you have a business and you finance your own debt, it's much more powerful for you because you're earning a rate of return while you're financing your own debt. At the end of the day, what we love to be able to do is share strategies, systems, and processes that we measure through building out your own personal financial website, which I'll get to in a second. But when it comes to the map, we understand the rules and the formula, and then the velocity of money multiplier. Who knows what the velocity of money is? Raise your hand. Anybody? Okay, thank you. So very simply, I'm gonna just share it with you. So if you look at what the bank does, if I wanted to own a bank, what I would have to do, brick building, I'd have to come up with a surety note, a background check, $1.5 million or $10 million. And if I owned a bank, what that would let me do is what the bank does. They loan money out over and over again. They don't take any financial risk, they take credit risk. Because you're putting your money in, savings right now is giving you 1.5%. They loan it out for student loans, for credit cards, and for mortgages. And they make 40 cents on every dollar you give them. So I want you to think about that. What if you could make 40 cents on every dollar that you had? Is that something you'd be interested in? Raise your hand. Okay. Do you think it happens overnight? Time, T-I-M-E, things I must earn. Time plus proper mentorship, notice the word proper, equals massive acceleration. And this is when Chris talks about the wealthy do it in 5 years or less, right? When I say proper mentorship, communication amongst all your financial professionals, everybody has to be on the same page if you want to achieve the optimal wealth, right? So when we look at the velocity of money multiplier, I'm going to just speak in terms of a cash value overfunded life insurance policy. And I'm going to use a big number on purpose. It's all relative, and we could bring it lower, but I just want to get this into your nervous system. If somebody was going to put $100,000 into a policy, which is baseline premium plus what we like to call dumping, and they did it for the first year, and it was a 60-40 blend, we'll call it. 60 baseline, which by the way builds cash value, 40, which is immediate cash value. And if that same person, after they dumped in the 40, within the first month or two, leveraged it back out and bought a piece of rental real estate, there's a couple of things that are happening at once. The $40,000 that came out was a down payment on the property. Now remember, it's still earning a rate of return inside your policy, dividends and interest. $40,000 on the property, and let's say the property cash flowed conservatively at $20,000. Let's say it was a $200,000 piece of property. That means your cash on a property is earning 50%. Do you see that? Do you want me to say it again? Do you want me to say it again? Or so if you bought a piece of real estate, down payment $40,000, but the cash flow is $20,000, cash on cash return is 50% ROI. You see that? Yes. Okay. It's still earning the conservative rate of return in the policy. And oh, by the way, that policy is giving you protection from lawsuit, inflation, and interest rates, as well as disability on that same dollar. If you did that the second year, you're now going to buy 2 properties, right? Same concept, 2 properties, because now the 100 in year 2, you have about 90, 80 available. Those 2 properties are giving you $20,000 each in cash flow or $40,000. You're still getting $20,000 from the first property, which is $60,000. That covers your baseline insurance payment in year 3. And the rest is history. Anyone that followed us 3 years ago and stayed with our model right now is absolutely crushing it. They're crushing it, and the belief in the insurance strategy is even greater because psychologically there's a torture going on with Bitcoin, stocks, bonds, and real estate is about to create some uneasiness unless you're with the right team. And unless you know, as Chris said, whether the real estate goes up or down, he's always making money because of his insurance, banks, and his partnerships and his mentorships. Does that make good sense? Raise your hand. All right, let's shake it out real fast. Everybody stand up. We're going to finish the next 20 minutes real strong. I don't know the button thing, but just show up. Come on. All right. How you feeling so far? Thank you. Love it. Okay. Is this stuff beginning to land when it comes to a process, not a product? It's about a process that's tied to an economic mindset, that's tied to your core values, right? That's tied to what you want to do for the next 5, 10, and 20 years. Who here, raise your hand, has a 5-year goal? Okay, great. Now give me the noise that it feels like if in 5 years you don't hit that goal. Yeah. Right? Remember, everything that's happening to us right at this moment is a collection of our thoughts for the last 5, 10, and 15 years. Because thoughts create things. The mindset around money is so important for you to attract the money. And getting that right is the key to take off. And by the way, if you accelerate properly, you'll break inertia and there'll be no gravity holding you back. That I promise. So, what if in 5 years you took all the action steps that you're learning today, tomorrow, and Saturday, you I-dotted, T-crossed, doubled, and tripled down, and not only did you hit your 5-year goal, but you exploded. Tell me what that would feel like as loud as you can. Okay, good. By the way, yesterday I flew in from Florida and I was on a mastermind with some of the Epic team members. And in that mastermind for 3 days, you know, we learned some really creative ways on doing what we normally do from folks that do it in a way that we don't normally do it. And that's what happens when you're around other people. It's called proximity. Proximity is a powerful thing. Now, I remember when I first signed up for Tony Robbins, I was like, yo, I signed up, I'm good. I didn't know I had to do any work after that. I was like, yeah, I'm at Tony Robbins. I'd be home and everybody, yeah, no, I signed up for Tony Robbins. I was there for 3 days. And I felt, we call that the epic swag when we start bopping like this. And I was like, no, it's all good. Yeah, I was at Tony Robbins. I met a couple, I shook some hands, but I did nothing. And then 6 weeks later, I met one person who changed my life. Have you ever met somebody that changed your life? For the better. Every word means something. You can't wish to be on a private jet. You got to be specific on when you're going to be on a private jet. Although the greatest experience of my life, next to my wife and children, was going to the Ukraine. So 6 weeks later, after Tony Robbins, I meet Sean Callaghy. Does anybody here know Sean? Have you guys heard? Yep. If you don't know him, congratulations, because when he takes the stage, listen, take notes. He is going to share with you, with integrity, with a map, no different than our financial freedom map, on how to influence people from hello to yes with integrity. So I meet Sean, who, by the way, is the leading New Jersey attorney in recovering revenues for doctors. He has a 120-person law firm. And when I went to the event, somebody was like, yeah, you got to come see this guy speak. And I couldn't stand attorneys. And at that time, doctors annoyed me, right? So all kinds of limiting beliefs. I was like, nah, I'm not going. I was just at Tony Robbins. I'm not going. Now, meanwhile, I didn't even get one appointment. It was 6 weeks later since I went to Tony Robbins. But I was at Tony Robbins. So I see Sean, I finally get there and I was late. And he's speaking, but not as an attorney. He's speaking as a financial business coach, and I heard it right away. I had the good fortune growing up, and if anybody knows basketball, and I'm old now, but Bob Hurley, the coach of St. Anthony's High School, his brother married my sister. My sister was 12 years older than me, so since I was this big, I saw success, what it looked like. I wasn't ready for that at that age, but as I got older, anytime I came around somebody that had systems and processes, although I couldn't articulate it, I knew what success looked like. And when this brother was speaking, it reeked of success. And he was talking all about how to build businesses, how to build mindset. how to create breakthroughs. And it blew my mind. And by the way, when they introduced him, at that particular point, in 2014 and 16, he was one of 2 top 100 attorneys that had jury verdicts with, his client were underdogs both times that resulted in $27 and $33 million verdicts in favor of his client. How cool is that? Right? Like how cool, like the integrity. He was defending underdogs that other people wouldn't take. And by the way, wasn't charged by the hour. So I meet this guy, blown away, spend some time with him, and he takes me under his wing. Allows me to speak on his stage for the next 12 months. During that time, he began to cultivate a relationship with Chris. I didn't know Chris yet, and then I finally met Chris, and in my phone it said, Chris Crone YouTube. That, you know how like we have our phones and you got to figure out where you met somebody? That's all I knew, Chris Crone YouTube. And I watched a video or 2 when I saw real estate. Didn't pay much attention to it, but I knew when I saw him at Tony Robbins, because I did go back the second and third time, but I started taking notes. But Chris Crone in the first row, right here, was taking notes like a furious lunatic. And by the way, you know how the seats are tight. I was like this, because he was like taking up all the space. But the notes he was taking was incredible. So you could tell like you're around success. And what does that have to do with insurance? Well, I'll tell you. About 6 months later, Sean was doing his initial 3-day, the first one he'd done, 3-day, seminar. There was about 20 of us there. And the whole time he talked about ecosystem mergers. So when you have businesses and you merge, not network, but an ecosystem merger where both folks share their communities with each other to make the community stronger and better so they can create the optimal wealth. He was talking about that, and the whole time he talked about Chris Crone. And what was interesting is Eddie Gartner, some of you folks, if not all you folks, know who he is. We were sitting together, he pulled up the video, and Chris was doing a video on life insurance. I couldn't believe it. I was blown away. Because what he was saying on the platform he was using was something that I had dreamed about. Blew my mind. So I looked up on my phone, it said Chris Crone YouTube, and I called him. He took the call. And by the way, I was so clueless. I used to send like Chris Crone like pictures of like inspiration from the time I met him to the time I finally called him, like a lion, like eating, whatever. Something you would see on social media. So I'm letting you know who I was. Right? No different than anybody in this room. Super blessed to be up here right now. So I started talking to Chris, and I said, hey, Chris, who you working with? Or do you do this for a living? Because the video was so good. And he uses insurance banks on purchasing all his real estate. 6,000 transactions, $1 billion in real estate. He bought his jet with it, right? So the point is, we formed a partnership because of Sean. About a week later, 2 weeks later, I'm out there in LA. I'm with my other partners, John Spring, Kelly Cole, fiduciaries, by the way. They could analyze everything you have. And some other folks. And at a dinner, Chris and I form a partnership within 7 minutes. Now, it took me 7 months to go from meeting 1 to meeting 2 with Sean Callaghy. But because of edification, this is important when it comes to your money, folks, I promise. Because of money mindset. Because of contribution. Because of saying yes when you don't want to say yes. And I don't mean making somebody happy. I'm talking about when it comes to sacrificing time. And most importantly, going into uncertainty with an open mind to break through your limiting beliefs. Because of that, we form a partnership with Chris in 7 minutes. Incredible, right? And this, the first time I spoke on Chris's stage, I want to say it was April 2019, but I could be off on that. But the elevation and me going back from when Chris stepping into his power, even since then, has been an incredible ride. And it's to really serve you, to share with you strategies on how to crack the code on financial freedom. And it takes a team to do it. It takes mentors, the right mentors to do it. And it takes an understanding of how to position yourself when economic winter comes to be able to pounce on it because everything's on sale. Chris spoke about Ray Dalio, 16, 15 different asset classes, correlated versus non-correlated asset. What does that mean? Well, cash and stocks are uncorrelated, meaning if stocks go up or down, cash is going to be the same basically. Life insurance and real estate are uncorrelated, meaning if real estate goes up or down, life insurance stays the course. Cash and life insurance are correlated, right? So when we run money through a cash value overfunded life insurance plan, not for 1 year, but have a game plan behind it, what begins to happen is it'll start paying for itself if you do it the right way. And that's if you choose for it to pay for itself. Because every year that goes by, it becomes more and more powerful. Jerome Powell can't mess with your life insurance policy. Joe Biden can't mess with your life insurance policy. Putin can't mess with your life insurance policy. He ain't got nothing on your life insurance policy. The Fed can't mess with your life insurance policy. Joey from Brooklyn that calls you on the phone can't mess with your life insurance policy. I used to say my name isn't Joey, I'm not from Brooklyn, I'm a guy from New Jersey, because we all sound the same. So the point is, how do you maximize your money and live in an end-to-end scenario continuously? Who are the mentors you find? What's your relationship with your accountant, your stockbroker, your insurance agent? Do they talk? I'm going to keep saying that over and over again. One of the things that we do is we will build for everyone here for free a personal financial website that at least it keeps score of everything you have. It's tied into all of your financial institutions and it aggregates on a daily basis. And then we can monitor and measure what your real estate looks like versus your stock portfolio or your 401k or your cash value insurance. There's an online vault that you can put all your estate plan documents that makes it easy for us to speak to your accountant or other planners in your world. And what begins to happen is you hold people accountable. Has anyone ever experienced where somebody tells them one thing and then they go to the person and the person says, no, I never said that? How often does that happen? You know what we do? We do a joint text. Clarify and verify. This clarifies and verifies. Joint text, tell the truth. You need to hold everybody accountable. You have a finite supply of money that comes to you in your lifetime. And even if you made mistakes, it's okay. You got to forgive yourself. Don't live in that past. But even if you made mistakes, it doesn't mean you have to make the same mistake twice. Right? Don't chase a rate of return. Let it come to you. Chasing rates of return creates a financial scarcity mindset. You know, Chris talked about he measures and monitors whatever investment he's going to do. He digs in and does it, and he does his research. And folks, you have to research. You have to get educated as best as you can so you ask the right questions. If you don't ask the right questions, then you're going to find yourself in a situation, and I use this often, of running east looking for a sunset. It sets on the east if you're on the moon, but not here in Utah. Right? So you have to ask the right question. When you're experiencing some fear and uncertainty, out loud, go in the mirror and say, what can I learn from this? How can I get better? Where can I improve? How can I create more revenues and income on a daily basis and at the same time scale my business? And I promise you, if you do that, answers will start coming. For me, I remember feeling that I wasn't fulfilled anymore. And, you know, my son got cut from basketball. We talk about the story in December. Basketball is like a sacred thing for my family. And as a sophomore, JV, he gets cut. He made the freshman team, doesn't make the JV. They're bringing down juniors, bringing up freshmen. If it was all sophomores, he would have made the team. But it's still, we felt it. We felt it as a family. So we sat down and, you know, he said he wanted to sell out and do it, so we wrote up a contract. And this is when Sean and Chris joke about me that I'm a basketball coach now. I'm not in the finance business anymore. We created a whole team of kids that got cut in January and February to mimic the season. And I'm bringing this to you because I realized that I wanted to have more fulfillment in my life because I wasn't experiencing it. You know, as a recovering alcoholic, my job on a daily basis, above all, is to help anyone that wants to get sober how to get sober. I can't go tell somebody, hey, you're an alcoholic. But if somebody that was an alcoholic said, Rob, what do you do? That's my job. I drop everything, right? That's my number one job. However, I wasn't feeling fulfilled anymore outside of that. So watching these kids that got cut gain confidence, it was an incredible feeling. And I created other friendships and partnerships throughout that time, right? Because I trusted the process. The Epic team, because of training, because of what we do on a daily basis, we're just running with the ball, enjoying their own success by serving all you good folks. Long story endless, we end up in an AAU season, March, April, May, June. Now we brought kids on. With the kids that got cut, we created a 10-person team, and we just went 33-4 with 25 straight wins. And I was the assistant coach. How's that? But the point was, I kept saying I needed more fulfillment. And in the middle of that, Chris Crone called me. Oh, I love her. Chris Crone called me. She holds me accountable too, by the way. Let me tell you something. You get Marianne in your life, that's an accountability coach. But Chris Crone called me. And Chris said, hey, it was quick. I'm going to Ukraine. Do you want to go? Because I was asking for more fulfillment. And I had no idea what I was stepping into. Day one, I was complaining because there was no air conditioning in Poland. Right? None. Big Sugar needs air conditioning. Right? Then I had to walk with my suitcases 50 pounds over the Poland border into the Ukraine. But once we got into the Ukraine, and Luis, I love you, brother. Nick Mariotto, I love you. Anyone here get to know Nick? You want to talk about shared experiences? At 3 o'clock in the morning on a train, I got Sean and Chris, on intervention on Rob Gill. And then I got Nick on the phone with his wife because his son just went through a surgery similar to what Sean goes through. And then Sean getting his mom on the phone to talk to Nick's wife on the phone about how to handle what was happening. This was on a train in Ukraine, with beds. Incredible, right? Shared experiences. I never thought this was going to happen when I was looking for more fulfillment. And what begins to happen is when you ask the right questions, say yes when it shows up. If you say yes in the face of uncertainty, especially, stop living in that comfort zone. What will begin to happen is your world will change quickly for the better, right? So listen, first of all, I want to thank everybody for giving me this hour. You guys are the best. I love coming out here. Anyone here, my goal is you walk away 5-10 years from now, you tell a story about how this conversation changed your life.